Welcome to All Tax. You're probably here because you're looking for some insight on completing your taxes this year, or those paid for Google ads are finally paying off. Or maybe Facebook heard you speaking about taxes and poof, our site magically appeared as the suggested source. In any case, we have 7 videos that will walk you through a few tax topics for 2020, all in 3 minutes or less. You hate taxes and you hate 2020, big surprise. So let us help you wrap up your last obligation and move on to better things. Ooh. Okay, show me the money. The vaccine is on the way. Hold on, COVID-19 is still active and you may not want to visit an actual office to have your taxes completed. Or maybe you just don't have the time in general. We have you covered with an online account portal that is accessible from your computer or your smartphone. Let's walk you through it. First things first, click Client Login. Log in using your account, or if you're new to all this, click Sign Up. From there, enter all that juicy personal information, and don't forget to make a safe password. After that, your account will be created, and you'll soon be sent 2 emails. One from All Tax containing your username, email, and password you entered, and the second an authorization form. Click Review Documents, enter your info, and boom, you're in business. What you'll want to do next is, from the home page, click Upload Documents. Unsure of all the documents you should be submitting? Simply click the personal or business tax checklist to make sure you haven't forgotten any of those pesky forms. If you're still unsure, don't hesitate to contact us via email or phone. Once you're sure you've got all your documents on your computer, select the files and they'll automatically be uploaded. All that's left is choosing a file name. Personally, I've gone with Samson's Big Ol' List O' Taxes 2020. Hit submit and Bob's your uncle. That's that. Taxes, bookkeeping, planning. We do it all at All Tax. Welcome to All Tax. You're still here. That's a good sign. Quick, arbitrary question. Do you like saving on taxes and increasing your net worth? Of course, we all do. But how do we attain this within Canada's current tax framework and without getting caught up in your extended family member's crazy pyramid scheme? Extra, read all about it. Financial freedom today. Just buy this wonderful herbal supplement, then sell it to your family, and then they can sell it to the ma, and then they can sell it to your pa, and then they can sell it to your dog. No, stick to what is proven. And what's proven is spelled with 4 big letters. RRSP. That's right, I can spell. What is an RRSP and why do they matter? An RRSP stands for Registered Retirement Savings Plan. The best part about an RRSP is that in most cases, you get a larger tax refund for every dollar you put into it. Let's walk through an example. You made $50,000 in 2020. You decide to contribute $3,000 to your RRSP. This will provide to you approximately $913 as a tax refund. Wait, what? Okay, let's summarize what I just said. You get to increase your net worth by $3,000. You get a tax refund of $913 that you can now use to buy whatever you want. Maybe new clothes or, oh, that new PS5 would sound pretty nice. Or you could even place that in your tax-free savings account and experience even more tax savings down the line. When you turn 65, you are currently entitled to 2 government programs, Old Age Security and your Canada Pension Plan. In 2020, Old Age Security payments were $614.14 per month, and the average CPP as of June 2020 was $710.41 per month. Now, let's add that up. $1,324.55 per month from the government. That's before tax. If you don't have a company pension plan, nor do you have money saved up, this may be all you have to look forward to. That barely pays rent. This is another reason why RRSPs are so important. You save on tax while you're working, and you better position yourself for retirement. Taxes, bookkeeping, planning. We do it all at All Tax. All Tax. More like all facts, because we're spitting facts. Anybody? Tough crowd. Welcome to All Tax. More like all naps, get ready for the most boring episode of the entire video series. Bookkeeping. Now, you may be asking, Samson, your whole video series is on taxes. How can it get more boring than that? Allow me. Now, bookkeeping may be boring, but good bookkeeping can cut tax preparation costs substantially for your business. Some bookkeeping strategies that have been used in the past include throwing receipts in a box, waiting until the end of the year, and then handing that receipt box over to your accountant or tax professional to file said taxes. Tax filing season is a very busy time for accountants and tax professionals. They have to file nearly all of their clients' personal returns between January 1st and the end of April. In addition to that, some documents that they need to file taxes are only made available to the end of March. This gives them 1 month to cram in as much as possible. When you hand in a box of receipts in January or February, they are already crunched for time and often have to charge you a premium to have bookkeeping completed prior to actually filing a tax return. Let's look at an alternative, shall we? If you enroll a firm that has bookkeeping services, they can keep your books updated throughout the entire year. Now, this reduces any rush bookkeeping at the end of the year and minimizes error. This is achieved because if receipts are missing, well, then the bookkeeper can just contact you while a transaction is relatively recent. If I asked you about a $100 bill at Earl's 3 weeks after you expensed it, likely you'll be able to recall who the client was that you were seeing and how scrumptious that fettuccine alfredo was. However, if your bookkeeper asks you about it 10 months afterwards, I don't think that you're gonna remember. Lastly, use an electronic receipt filer whenever possible. Receipts fade out pretty quickly. So, scan or take pictures of your receipts and upload them to a common drive or program that your bookkeeper has access to. This way, you can have them documented permanently. Taxes, bookkeeping, planning. We do it all at All Tax. All Tax, huh? More like caterpillar tracks, because caterpillars do. Who brought that? Welcome to All Tax. Did you miss me? What are you talking about? Of course I missed you. In this video, we'll be looking at CERB and CRB, and what are some things to consider to those that claim these benefits. Lost your job, were working reduced hours due to the COVID-19 pandemic, or were sick, quarantined, or forced to stay home to care for children or other relatives in 2020, the CERB provided income support for $500 per week of up to 28 weeks with a maximum claim of $14,000. The CERB was available until September 26th, 2020. The government will be issuing you a T4A tax reporting slip for 2020, issuing the total amount of CERB that you've received. No tax was deducted at source from your CERB payments, so you may need to pay tax on the CERB amounts you received when you file your 2020 income tax return. The amount of tax that you will owe on your CERB will depend on your 2020 marginal tax rate, taking into account all other income you may have earned in 2020. Before year end, you may wish to estimate your total income from all sources and estimate any taxes owing, perhaps by using an online Canadian tax calculator so that you can set aside funds to pay the taxes you may owe on the CERB come tax filing season in April. If you are not eligible for EI, perhaps because you are self-employed, you may qualify for the CRB, which began on September 27th, 2020 and runs until September 25th, 2021. You can receive a taxable benefit amount of $500 per week for up to 26 weeks. You are required to apply after every 2-week period for which you need support, and the deadline for applying for any 2-week period is 60 days after the end of that period. While the government has indicated that unlike the CERB, it will be withholding 10% in taxes on any CRB payments, this may be insufficient to cover your tax liability on the CRB, which will be taxable at your 2020 marginal tax rates. In addition, if your total income, excluding the CRB, was over $38,000 in 2020, you may be required to pay back the CRB at a rate of 50 cents for each dollar of CRB received for income over this amount. It's a good idea to estimate any additional tax you may owe on the CRB, as well as plan for potential repayment of the CRB if you estimate that your 2020 income could be over $38,000 this year. Taxes, bookkeeping, planning. We do it all at All Tax. Welcome to All Tax. You're a business owner. All right, make it rain. But have you considered the benefits of incorporating your business? No? You're telling me that you don't stay awake at night thinking about the tax deferral of income in a corp that will allow you to more effectively expand your business and create opportunities to utilize other tax deferred vehicles and the capital dividend account? Whew, well, then let's get you up to speed. First off, let's talk tax rates and expansion of your business. The primary benefit of incorporating your business is that you may be eligible for the small business tax rate. Any Canadian-controlled private corporation only pays 9% tax on their first $500,000 of income here in Manitoba. However, if you did not incorporate your business and were still operating as a sole proprietorship, you could be paying the highest marginal tax rate of 50.4%. Now, imagine you're looking to expand your business. You're looking to lease or buy another building. You're going to acquire new equipment and you are going to hire some new employees. Well, who'd have guessed it? That all takes money up front and on an ongoing basis. If you were operating as a corporation, you would have more money retained for these expansions. And that's the whole point. The government allows a lower corporate tax rate so that businesses can expand, buy more goods, and provide more employment. Paying less taxes allows you to buy more goods and create more jobs. Well, now I'm just sounding like I'm into politics, but my mother always did say that I have a politician's face. In another video, we will cover the benefits of having a holding company. As my father always said, taxes, bookkeeping, planning, we do it all at All Tax. Hi there. Welcome to All Tax. A holding company. Sounds pretty sophisticated if you ask me. Ladies and gentlemen, I have an announcement. I own a holding company. Kind of like an offshore bank account. But after this video, you will realize how simple and necessary holding companies actually are. All Tax intro. So, a holding company, which is generally referred to as a holdco, has a few benefits. First off, consider an operating company called an opco that has two owners. For those that don't know what an opco is, it is the company that actually carries out the business of the company. Consider, let's say, ABC Construction Company. This is the opco. If the opco generates income, the owners may look to distribute those earnings. However, imagine that owner 2 needs more money than owner 1. The opco pays a dividend to both owners in the amount that is required for owner 2 to pay their bills. Owner 1 would be upset that they have to pay additional taxes or income that they didn't want to withdraw from the opco in the first place. Let's consider a scenario where the opco distributes uneven dividends and pays each owner what they need. It would create uneven exposure to owner 1, who technically now has more of their money invested in the opco. So, how do we solve both issues? Please, somebody tell me. Well, I'm glad you asked. We create holdcos. Each owner has their own holdco, and each holdco owns the shares of their opco. When it comes time to distribute earnings, the opco pays dividends equal to each holdco. This is done on a tax-deferred basis, as the opco already paid the corporate taxes. If owner 2 requires more money, they are free to pay a dividend from their holdco, while owner 1 is able to retain their money in their holdco for future purchases or investments. And there you have it, folks. A few of the benefits of owning a holding company. Taxes, bookkeeping, and planning. We do it all. I don't know why I did that, sorry. Taxes, bookkeeping, planning. We do it all at All Tax. Welcome to All Tax. Life insurance. You thought I was going to talk about something exciting this time? Nope. Gotcha. I mean, it is corporate-owned life insurance, so it's a little bit edgy. Corporate-owned life insurance serves a few purposes. Number 1, it serves to mitigate risk. This is the most common reason people purchase life insurance. If the owner were to pass away, the company would receive funds to pay off debts, cover expenses, pay out another shareholder, or help cover personal expenses for the shareholder's family. Okay, this one doesn't really involve your accountant or tax professional, so let's just get to the next two. Number 2, permanent life insurance can have an investment component. This investment component grows tax deferred. Let's compare that. In Manitoba for 2020, the tax rate on investment income in a corporation was 50.67%. That means just over half of the investment income that you earn in your company goes to tax. That can be on stocks, bonds, and the various investment funds that your corporation may hold. If you invest in a permanent life insurance policy, there is no tax payable while the money grows in the policy. Additionally, once you start earning more than $50,000 per year in investment income, you begin to lose your 9% small business tax rate. By investing in a permanent life insurance policy, you do not face a clawback. Number 3, once you pass away, a portion of your life insurance policy is paid out of your corp tax-free. That means money that was otherwise 100% taxable if you had paid out from your company now is able to get paid to your family on a tax-free basis. The amount is calculated by taking the insurance policy's death benefit minus the policy's adjusted cost base. This amount is paid out through the capital dividend account. It is imperative that both your insurance advisor and your accountant or tax professional are well versed on the structure of these policies and how they are treated by the CRA. Taxes, bookkeeping, planning. We do it all at All Tax. Oh, look at that, huh? All this tax talk has made me pretty darn hungry. Anybody seen an Earl's around here?